I made the comment before we started recording, be careful what you wish for.
Yes.
When we go through $50, and that's if markets stay open. I mean, there could be a failure to deliver, this month. I mean, who knows? But once we get through $50, you've got people talking $100, $200, $600 silver. There's really, in today's world, there is no way to project a number that gold or silver can go to. And I mean, the reason being, the parameters are zero and infinity. And the reason infinity is a parameter is because if a currency goes to zero, then it is priced at infinity in that currency.
In a significant development for precious metals markets, BillHolter has highlighted silver's emerging role as a critical asset amid growing economic uncertainty. The U.S. government recently designated silver as a critical mineral, signaling that domestic production may be prioritized for national needs rather than commercial sale. Holter warns that this move could dramatically tighten supply, creating a market where physical silver becomes increasingly scarce. Investors holding physical silver are now positioned at the center of a rapidly evolving landscape, where scarcity and strategic importance could combine to push prices higher than many analysts previously imagined. Holter points out that the designation of silver as a strategic metal has profound implications for supply and demand dynamics. When the government steps in as a major buyer, it effectively removes significant quantities from the open market, while other nations are likely to hoard their silver in anticipation of higher prices. This confluence of factors sets the stage for a sharp supply squeeze. While the prospect of soaring prices is enticing for investors, Holter cautions that such a scenario also carries systemic risks, particularly in markets heavily reliant on derivatives and leverage tied to silver. The potential upside for silver is considerable, according to Holter. He notes that once prices surpass key thresholds, such as $50 per ounce, market speculation could escalate dramatically, with forecasts ranging as high as $100, $200, or even $600 per ounce. However, Holter emphasizes that conventional price models may no longer apply. In a scenario where fiat currencies weaken or collapse, even astronomical sums of paper money may fail to purchase an ounce of silver. This underscores silver's role not just as an investment, but as a hedge against currency debasement and systemic financial risk. Before we dive into Bill's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
Right. Well, I mean, look at it this way. Naming it as a strategic mineral or strategic metal automatically creates the demand of whatever the government's going to buy. And it automatically reduces the supply available to the market because that supply is being bought up by the government. So you've already got a disastrous supply-demand equation. They just poured gasoline on that fire.
Yeah, and of course, what you essentially were saying here is that every other central bank, every other sovereign, everyone else is going to say, well, I'm not selling my silver at this price. I want a much higher price, and I don't quite know what that is yet.
The much higher price, I made the comment before we started recording, be careful what you wish for. When we go through $50, and that's if markets stay open. I mean, there could be a failure to deliver, this month. I mean, who knows? But once we get through $50, you've got people talking $100, $200, $600 silver. There's really, in today's world, there is no way to project a number that gold or silver can go to. And I mean, the reason being, the parameters are zero and infinity. And the reason infinity is a parameter is because if a currency goes to zero, then it is priced at infinity in that currency. In other words, no amount of currency can buy an ounce of gold. That currency won't be accepted. And that's where we're headed on a global basis. I mean, if you think that the US dollar can collapse, crack up, and the system remain running, that's not going to happen. It can't happen.
Yeah, I think this is, that's something I think when we first
It's a giant margin call.
Yeah.
This is a giant margin call that we're looking at. It's the biggest, it's the margin call. It's the mother of all margin calls because the entire system is going to be called.
As you say, be careful what you ask for. So we all want a higher silver price, but what's that going to do? How do you think that'll play out? I certainly, obviously, it'll play out very well for the physical markets, the global physical markets, who have got enough of this physical silver to play their game as they want to do now. I mean, in other words, and the fact is that now that everyone militarily is also looking at silver, and not just for green purposes, AI and all those kind of things. So who in their right mind is even going to, I mean, if you're a producer, yes, you have to sell, you have to keep in business, you have to sell something. But on the other hand, maybe you're not going to hedge it anymore.
Well, there are companies that have I think at one point, First Majestic was holding back some of their production and not selling it because silver in a vault is better than money in a bank. But the be careful what you wish for part. If we had, and I don't know what the number is, $5,000, $10,000, $25,000 gold, and I don't know what the number is on silver, but there's a number out there that implodes those markets. They no longer function as far as being able to deliver, which makes those contracts worth zero, but the ounces worth, immeasurable numbers. What that will do is it will break confidence. The entire system runs on confidence, and you'll see the system sputter. I don't believe any markets will still be open 72 hours after a failure to deliver. And if you get markets closing because everything runs on credit, then you enter the very real possibility, if not probability, of a spell where we live Mad Max world. And nobody wants Mad Max world. I mean, you could be sitting on the biggest pile of silver and it's still not going to do you any good because if you've not prepared, food wise, where your position is, can you defend that position? It's Mad Max world is something that no one, no matter how wealthy they are, no matter what they own, what they have, no one's going to thrive in that world.
We talked about this once before, Bill, and it really interested me, and it interested a lot of my friends and subscribers. I know that you have taken responsibility for yourself a long, long time ago, and you've moved yourself into a self-sustaining environment where, if you had to, you could hunt your food, you could provide your own power, water, etc., etc. And that is obviously the ultimate position. As you say, no matter how much gold and silver you got, it's going to be difficult anyway. So you need food, but I think silver would, for the people that can't, who are stuck in a town, for example, obviously we suggest to them, look, at least get out of these worthless $0, or what will ultimately be a $0, into maybe some silver coins. And at least even if you haven't got a lot of spare money, at least to diversify into gold and silver. So for those people living in a town that can't do what you can do, and obviously I would recommend people try and contact you and find out how they may do that. But what should they be doing, Bill? Because they'll be looking at this thinking, yeah, what do I do?
I believe that your current location is more important. I mean, obviously having some metal outside of the system, that's a must. Otherwise you have no money. Because when this goes down, the wealth accrual into gold and silver will be beyond what anybody, including you or I, suspect is coming. I think it's going to be far larger. But I think your location is the most important. You can't use your gold and silver if you're dead. And if you live in a city right now and the system goes down, you're dead. If you don't have a place outside of the city where you can let's use the word hide, pull a rock over the hole and wait for the storm to clear. If you're in a city, you're dead. There's no way to defend yourself. Suburbs, it'll get there, pretty quickly. But out in the country, I mean, if you are remote, and you've done some things such as, power source, a water source, food sources, food stocked up, and a way to defend that position, you're going to last an awful lot longer, and you may make it all the way through to the other side, however long that takes.
Holter also highlights the broader consequences of a silver price surge on the financial system. He describes the situation as the mother of all margin calls, warning that contracts, leverage, and derivative positions tied to silver could be exposed if rising demand collides with constrained supply. While holders of physical silver may benefit, disruptions in credit markets could ripple throughout the global financial system. Confidence, Holter stresses, is the foundation of modern markets, and any serious shakeup in silver trading could test that foundation in unprecedented ways. Industrial demand further compounds the market pressures, Holter notes. Silver's critical role in green technologies, AI, and other industrial applications is drawing heightened global interest. Some producers, including First Majestic, have reportedly withheld portions of their production, recognizing that holding physical silver offers security that paper assets cannot. As industrial demand and government stockpiling increase while available supply tightens, the market is entering a period of historic tension. Holter emphasizes that these dynamics create conditions where the value of physical silver could dramatically outpace paper or digital representations.
Yeah, well, 5% was the high. We're 4.25 thereabouts now on the 10-year, but that was the high on the move. Up from, at one point in time, I think the 10-year traded as low as 0.6 of 1%, or maybe even lower. So it's been a huge move already. And, I don't know if 5% is the number or not, but there is a number that unwinds the entire credit edifice. Because what you need to understand is that the entire world, whether it be financial markets or the real economy, everything runs on credit. And if credit becomes more expensive because it is being shunned by foreigners, how does the U.S. How does the U.S. fund a $2 trillion deficit? That's an extra $2 trillion every year that they have to borrow. And the answer ultimately is the Federal Reserve will buy those bonds. But that is, outright and direct monetization. The problem that the West is in right now is it's a debt trap. I mean, in the U.S., we're paying $1.5 trillion in interest alone. You've got problems in France. You've got problems all over the world with sovereign debt. There's too much of it. How do you service it? That's why they're desperate to get yields down, but Mother Nature market is pushing rates higher. And that's where rates should go because there's more and more risk. There's little to no risk premium in sovereign bond yields across the globe.
And so essentially, I mean, the way that just so subscribers understand what we're talking about, so yield curve control is essentially going to flood the market with cheap money, isn't it? And so what's your hedge? What's your hedge? Global central bank gold buying is going to certainly be incentivized. What's the hedge for most people?
Yeah, well, the obvious hedge is gold and silver. And the reason being gold nor silver can bankrupt. They are money themselves. They cannot bankrupt in a world that is bankrupting.
Absolutely. And I think if we can revert back to silver for a minute, because what we're seeing here is a huge, long-awaited breakout. I mean, obviously, we all know that China has been in the driver's seat for a long time, and they've been playing the arbitrage trade and, being in control of the physical side of the market. They could arbitrage the paper side but essentially, what we're hearing is, hey, gloves are off now, and especially after Trump's most recent BRICS attack on the BRICS, like clearly putting the BRICS in the crosshairs with tariffs, and then most recently some very odd statements that he made after the SCO meeting. What's your thoughts there?
Yeah, I think your comment, the gloves are off. I think that's up until this point. I mean, it would be extremely easy to break the Western financial system with $5 or $10 billion. I mean, if you went into COMEX and LBMA and said, "Here's $10 billion, I want metal," it'd be over. There's no way to deliver that kind of metal short term. So it would break the markets. In the past, I want to say that Russia, China, the rest of the world were being polite because they didn't want bombs raining down on them. One of the big things, the reason the dollar has been the reserve currency for so long is the U.S. military. Basically, we forced the world with threat of the U.S. military. If you don't use dollars, I mean, look at Saddam Hussein. Look at Gaddafi. They both talked about, 15, 20 years ago about doing a gold-backed currency. And what happened? They were killed. In the past, countries have seen, those two examples, Gaddafi and Saddam Hussein. They saw those examples and said, well, yeah, we'll just buy it quietly. And now that the war of words is on, it would not surprise me to see either a country or countries. The way to expose that is just create a failure to deliver in either silver or gold, and it'll be both within 24 hours. If either goes, the other's going to go within virtually immediately. So they're at the point now, like you said, the gloves are off, and money is just flowing into, whether it be the physical metal itself or even the leveraged contracts in the West. You're seeing foreign nations buy those.
And I think most recently, and I know we're recording this on the 3rd of September, so it's not really a time-sensitive thing we're talking about here, but essentially what just happened, and I don't think this is clearly not going to change, is that it's quite clear from Trump's comments that the SCO meeting between these major hubs that you're talking about, and military powers as well, really ruffled the White House's feathers here. And they're not handling it very well, because basically, I guess really, I mean, maybe I'm naive to think, wouldn't it be better to have a multipolar world where you take all the barriers down? But I guess US dollar hegemony is the problem here, is it?
Well, that's the problem that the rest of the world sees. The rest of the world wants to get out from under Uncle Sam's boot, if you will, by using dollars. They don't want to use dollars, and they prefer not to be in the SWIFT system. I mean, ask Vladimir Putin. The U.S., the West, stole 300 billion plus of U.S. treasuries going back to, 2023, October 2023. And you can look at a gold chart. The following day after that news came out, the price of gold started going higher. It's been like a tractor in first gear. The pullbacks, or what used to be smashes, have been very, very shallow.
Market dynamics suggest that silver could experience sharp upward pressure as industrial, technological, and governmental demand continues to rise. Once key price thresholds are breached, speculation may accelerate, driving volatility and potentially creating scenarios where conventional pricing models are no longer relevant. In extreme cases, diminishing trust in fiat currencies could amplify silver's value, positioning it as a critical store of wealth that no amount of paper money could fully replace. Looking further ahead, silver's trajectory is tied closely to systemic financial conditions. Constraints on supply, coupled with heightened demand, could trigger significant stress in derivative and leveraged markets, creating a chain reaction that affects global financial stability. In this environment, the value of physical silver may rise far beyond historical norms, offering both a protective hedge and an avenue for substantial gains. Investors and markets are likely to confront a landscape where scarcity, strategic importance, and monetary uncertainty converge, making silver a defining asset in the decades to come. Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.